Good morning, guys. Welcome to this Monday, August 10th. And it looks like the overnight is pretty much a little bit of a continuation of Friday, holding on to the gains. Friday was a pretty good trading day. The market traded higher. A lot of the tech stocks, the AI trade stocks was to the upside. And so far, it looks like we have a little bit of continuation to that. And we're in the middle of freaking August, middle of summer, so it's going to be a little bit of doldrums. I was just checking the news, and there is very little news about the market. At least today, we had the only two pieces on news throughout this week. On Wednesday, we get the CPI read. On Thursday, we get a PPI read, and on Friday, we get the retail sales read. So those are the three pieces of information which are going to come out this week. Other than that, today and tomorrow is pretty much anemic, nothing going on. And then we have Wednesday, Thursday, Friday. So we'll see how that all shakes out. But I think if you're looking for market action, the only news is going to drive the market is going to be on those 3 days. Probably Wednesday is going to be the big day, and then Thursday PPI is usually not as crazy, but retail sales could be interesting on Friday as well. So looking at the ES, to get started. We're finally, a heat wave here in SoCal is finally coming to an end, I think. It's been absolutely brutal the last couple of weeks. Let me see here. So move out of the middle to the upside on the ES. We've been going through the emotions here, and then you had the opportunity to see a perfect move out of the middle develop right in front of you. Big move to the upside. We cut off the buying at the 78.20s. We retraced. We cut off the selling at 77.20, 25s. And we retraced Friday and did not make a new high or a low. In other words, we're in stage 3. We are in an actual profile building value right now. So I'm just going to fold this back together. And what we're looking at now is just fading the edges fairly equally. If there's a piece of news going to break out of this one, either taking out the 78.20s or take out the 77. Sorry, take out the 78.20s or take out the 77.20s. So again, the nice 100-point range. Either side of those two, we may have a directional move. But right now, we're just going to fade those edges back to the mean. So initially, to get started, we're looking to sell strength, 77.95, 78.05, 78.20s for rotations back down. On the way down, looking to buy weakness, 77.75, 77.65, 50, 40, 25 to 30 here, or 20 to 25. Yeah, I'm not going to say 25. It's going to be that lower edge. Now, given the Friday's trading in the overnight, you may want to start with a slight bias to the upside. I favor these two support areas, the 77.75 and the 77.65s for rotations up as a buying opportunity. Give yourself a slight long bias, but I wouldn't be taking that to the bank if you wish. It to be technically as flat out range bound. The overnight is following a continuation a bit of Friday. So we could see some strength building. I mean, that could certainly happen from the get-go. And if that happens, we're still looking for these shorts, but against resistance. But it could be an early weakness trade here, buying against that 75s and the 65s for rotations higher. Now, if they trade below the 65s, that deal is gone. If they start trading above the 77.95, I would say that early on, I would not be looking to buy those on a pullback, if you know what I mean. So, yeah, I'm looking for, from where they're trading right now, early weakness into these two support areas as a buying opportunity. If they start taking it higher, then start backing off, I would not consider those as being the same type of buying opportunity as if it starts pulling back from the get-go. We're still looking to buy against them, just not with that kind of bias. So that in other words, so if it trades higher, then starts backing off, I'm taking off the long bias and basically looking to fade these edges fairly equally. So hopefully that wasn't too confusing. It's just a matter of if the market usually, because market follows certain cycles, and if it's going to if it starts trading higher with a bit of strength and then starts backing off in the afternoon, you do not want to be as aggressive buying early weakness as you would be with a slight bias to the upside to get started. If this starts backing off from the get-go, well, that's your opportunity. If it starts backing off too much, then well, opportunity goes away again. So that's kind of the way I'm looking at it. It's fairly straightforward. And it's a great example of a move out of the middle. So if you're looking at our methodology, we talk about that MOM, move out of the middle. That's exactly what it is. And it was a piece of news driving it, and the market popped exactly as it should. Now they're building value. You're going to go back and forth. They build value until another piece of news then breaks it out in either up or down. So it can go either way. But we'll know it fit the move out of the middle when they start taking out the outer edges and keep going. On the Nasdaq, Nasdaq is pretty much range bound, and it's back in this upper trading range. Hasn't been up here making news highs by any means or anything like that. The Nasdaq definitely had a strong few days. They're back up here again. This is where the whole thing started back in mid-July. Remember that crazy selling where we just got creamed? That you can see how if I throw this how far they went. They took it all the way down here to that 27, a little bit about 27,000. Then just in a few days retraced this whole freaking thing straight back up here to the 29,000. So almost 2,000 points to the upside on the 2,500 points actually onto the upside on the Nasdaq. So that's how crazy that is, you know. About 3 or 4 days to do that. So it usually that doesn't happen as fast. Usually they grind this higher and then they use that elevator down, and that's absolutely fall apart on the way down. But I would start off range bound on the Nasdaq. I would sell up strength up to the 30,060s. Look to buy weakness down to that 29,300, and just trade it in this range as a range bound market. So early on, given I'm going to start the same way as on the ES. So early on, if they immediately back off, I'm going to look to buy against that 850 and the 785. So those are the two support areas to pay attention to for early weakness. Below that, I just take off the long bias and go back range bound. I mean, that's not take off that slight bias I got on there earlier. So, and if they start trading higher, looking for shorts against the 29,970s, against the 30,060s, and above that one level above the obvious 30,120. 120 is just above this area of resistance. So I'll include that in that range. So looking for shorts against that 950s, the 30,060s, the 3120s, or 30,120s for rotations down. And on if they start backing off, looking to buy against support 850s, 780s, 690s, 640s, 670s, 530s, and so on, all the way down here to the 300s. So I mean, and I say I did these F2s up. So if you don't have to remember all the levels, just glance at the screen and you'll see where the market is at. But I mean, basically looking at fading those edges fairly equally. They've been kind of backing this off a little bit. You can see here all the way from 5 in the morning. It has been starting to do a little bit of selling here, but backing off the high on the overnight. So they're down at the lower end of the London close or the London low, and had been pushing that a little bit to the downside. But they got a little bit more to go before we really had to start changing our bias on this. So both ES and S, that's why I keep these two screens up as this. I'm not necessarily looking at the F4s for a lot of guidance. I always keep looking at the F2s where I'm at. And if I'm looking at if I'm getting into a level, then I go over to the F4 here, start looking for trade location and potential setups. That's kind of the way I'm doing it. Looking at the bonds to get started. Bond market is just kind of flopping around. They were to the down. They were up a little bit the last few days. Pretty much just building value at that edge. So on the F1 here, you're looking at them just building value right here. So you can see over time, if I make this a little bit bigger, you can see how this has been building. They were trading up here, but this is back in November. They're trading up here to 116s. In March, took a leg lower and been trading down here at the 112s. Now they're took another leg lower. So a very orderly way of the market to reprice itself. They're not by any means falling apart. And just most likely just due to refinancing pressures on the refinancing corporate debt or actually financing this AI spend. So more higher yields, lower prices on the bonds, higher yields we get. So I would still favor, I would just start off range bound, maybe favor the short side from the get-go and see if they want to try to take this lower. But I would just look to sell strength at 109.20s, 109.26s, look to buy weakness at 109.10s and 109.04s for rotation subs. So 2 levels up, 2 levels down, pretty much, pretty straightforward starting point for the trading day. The bond tends to move, and no, you get one of these big days where it moves a lot, and that's kind of what's going on with that. But it's how it moves. It has been moving lately. So if you can identify one of those days early on and get on it, that would be a pretty spectacular move. But it's much harder to do to spot those than you think. And then on the crypto side of things, not much happening. It's been pretty dead in overnight. Cryptos is the Bitcoin futures are up to 65. The Ethereum futures at 19, 18. But you can see how sloppy this is. That's going turning back and forth in the channel. Silver is a little bit to the upside. Gold is a little bit to the upside, but not by any means in a big way. Gold has been both silver and gold has been trending high. They've been trading in the high 50s on the silver. Gold was down at the 4,000 level. They've been drifting a little bit higher right now in the last few sessions. Oil trading up at 79. Well, they've been going on all weekend. I haven't heard anything about an Iranian deal over the weekend, and they stopped shooting that's last week. So, and I just saw some claims about some grandiose claims from the Iranians. So, just waiting for these guys to get that that smile wiped off their faces. I don't know why they keep smiling, but I guess they're still doing it. So we'll see what happens there. But oil creeping back up to 79, I would think that reflects tensions again. That okay, the Iranians just bought themselves some more time again, and they just gave us the middle finger again, and we'll see what happens. Anyway, back to the ES and the Nasdaq. And we're looking at, we kind of have left it. It looks like we're getting a little bit of a weakness here. They're trying to pull it back here. So we'll see. So that weakness, early morning weakness like this could be a nice buying opportunity. We'll see. If they start taking out on the ES, that's 77.65s. On the Nasdaq, below that 780s. I would just take off the bias and go back flat at range bound. All right, guys, we'll wrap it there. So not much, no news to drive the market this morning. So we'll see how the market feels, what kind of mood it's in. It's still earnings season, so still maybe some earnings driving it, but that's kind of how we get started. So good trading, guys. I'll see you back at 11:30. All right, later.